Good morning, everybody. Joe Ciaccio here. Please get a pen and paper out. I do this every single day, and I tend to forget. So I've got a lot of this stuff behind me, so I can always review it to make sure I know what's going on. Now, in our business, they use different words, different lingos for different carriers. An easy one is going to be the word graded, modified, and return of premium. Everybody thinks it has one meaning, yet the graded's got different meanings. So just think about that there, and I'm going to go down the little list of everything that needs to be talked about. Now, got a bunch of notes over here. So everybody has given a rate calculator. Comes free when you work with us. Put in the person's date of birth, either a level, a graded modified, a guaranteed issue, or something that is more like $25,000 to $100,000. You've got that, no charge to you. If you don't have it, make a note, get with Jay. And the reason I'm saying that is that I have an agent that called me last week and said, Joe, I wrote this client with, I can't think what carrier it was, and the rate was so high the client couldn't afford the one for $25,000. So I came down to 15, they wanted 25. I couldn't do nothing, I had to walk away. I said, well, did you use the rate calculator to show you which carriers fell into the category of least expensive all the way to expensive based on their health? He goes, no, I haven't had time to load it up. So I kind of gave him a little slap on the hand, brought it up. Royal Neighbors has now a preferred plan for everybody to use, $25,000 to $40,000, and the rates are very, very, hate using this word, but they're very cheap, okay? They're in the ballpark, they're very inexpensive. And if you don't use the rate calculator and you don't see these programs that are available, what's gonna happen is that you're not gonna make a sale. So everything today I'm going to talk about is information that you got to know. So when you're in the house with a client, hopefully the ding, ding, ding will come up and you'll do that. Now, let's say a smoker or non-smoker. Who would you put a client with who does tobacco, he does cigars, he does dip, he does chew, yet he does not do cigarettes? Prosperity says, Joe, if you got a client who does not smoke cigarettes, but they do anything else, we'll accept them as a non-smoker. Go to a client's house, they've got a smoker rate, you can come in and give a non-smoker rate with Prosperity. Now what if you have a client who does smoke cigarettes or smokes cigars, pipes, whatever? Got a company called Americo. America says, Joe, if you got a client who's willing to quit smoking in 3 years, we will give them a non-smoker rate, and when 3 years comes around, we'll check to see if they're smoking or not. Non-smoker rate for a smoker, no matter who they or what they smoke, America says we'll take them. Prosperity says, if you don't smoke cigarettes, we'll give you a non-smoker rate. Compare the prices, because the prices vary by the person's age, male or female. Put that in your memory bank. Okay, now, we have different categories that we go by. You got the immediate, then some carriers got a preferred, some got an immediate standard, graded, modified, return of premium. So every carrier has got different lingo, and it means mostly the same when you hear the word immediate, yet when you hear the graded, it's normally different. Not normally, it is different. Now, if you go to a client's house and the client says, I want immediate benefits, I don't care what it is, I want immediate benefits. Some clients, you're not going to be able to give it to them for the mere fact is that they just don't qualify for it. They had a heart attack last month, they just had cancer 6 months ago. Certain people cannot qualify for it even though they want it, okay? Now, if you're unsure and you don't know exactly who to put the client with, and they're telling you, demanding you, and insistent they get immediate benefits, what you're going to do, you're going to kind of phone a friend, and I'm your friend. I'm going to tell you, okay, put that client here, here, and here. So I'm going to give you a very good example. Gentleman just started working with us about 2 months ago, learning all the products, making a transition from his other home to this home here, doing very well, learning the products, yet there's a lot to know. There's a lot to retain, okay? Now, before I tell you his story, everything I'm telling you is in your agent manual. Everything I'm going to go over today is in your agent manual, so if you don't have it, if you haven't downloaded it, please do. You can either download it into paper or download it to your computer. If you don't have, if you never received it, because we have had issues with emails, get with Jay, who'll shoot it over to you. He called me and said, Joe, I wrote this guy. I had to write him with one of my old carriers because he wanted immediate benefits and we didn't have one. I said, okay, so we started talking all that stuff there. I said, well, what was his illness? He said he had COPD. I said, okay. And you put him with, I put him with Mutual, one of my other carriers, because their premium was inexpensive, and I told him I didn't have nothing. So we're going down the list, everything, and I said, well, you could have put him, and he's got Liberty Bankers. I said, you could have put him with Liberty Bankers on an immediate standard because that gives him immediate benefits. I'm talking to him, but I feel him raising his hand saying, damn, I didn't know. So immediate standard means they're going to get immediate benefits. The premium is higher than an immediate preferred. So it depends on what's going on with you if you're going to get the immediate preferred, which has the least expensive price, or you're going to get the immediate standard, depending on what company you go with. So we're talking, he said, Joe, I don't know if they can afford it. And I said, well, my recommendation to you is to at least give him the information. From there, let him make up his mind what he wants to do. He says, okay. Some carriers, when you go from immediate to graded, you're going to get a hit in commission. Liberty Bankers is level commission, right, Jay? Level commission up to age 80?
Yeah.
Okay, level commission up to age 80, preferred or standard. So he called me and said, Joe, you're not going to believe it. Went to their house. He says, I want to change. It's $17 a month more. If my memory's right, it's 57 cents a day. He told me it's 57 cents a day to get you immediate benefits. Do you want it? He goes, I want it. So I told him, I said, you got $17 a month more commission. You got more commission because you didn't get a hit in commission. So it was a win-win for everybody. So my philosophy that I've been taught years and years ago is a three-legged stool. It's got to be good for the carrier. It's got to be good for the client, which was good for the client, and it's got to be good for us. So all three of those must come into play before you sit and say, I'm going to put you this carrier. Now, by him not knowing that, all that means is that there's a lot for you guys to learn. Okay? This is not a hard business, yet there's a lot of intricate parts that you have to know when you come to the certain carriers. Okay? I'm going to tell you now, Prosperity, which is bizarre what I'm going to tell you. They've got an immediate, they've got a graded, and they got a modified. They're immediate, you get immediate day one. Their graded is 30% of your face amount year one, 70% of the face amount in year two, and year three is 100%. So they got a policy for $10,000. They pass away months 1 through 12, doesn't matter when, the beneficiary gets $3,000. They pass away between the 13th month and the 24th month, the beneficiary gets $7,000. Year three, they get the full amount of money. Here's the kicker when it comes to their modified. Year one, you're going to get 110% of your premiums back, which is 10% of whatever you paid in. So if you paid in $50 a month, you had it for 11 months, that's $550 if you paid in. Prosperity says you pass away, we're going to give you $55 on top of your premiums you paid in, so you're going to get all that money back. Which is also a good selling point for people who say, I'm just going to save my money. I don't want to put it to an insurance company because it's not worth it. I can make more in my savings account. Well, in actuality, they cannot. So you've got to be kind of cool how you say this here to where you don't make them feel bad, yet you've got to let them know what you have is better, but say it in a non-condescending way. Okay? If the client passes away in the second year with Prosperity on their modified plan, Prosperity says we're going to give you all your premiums back plus 231% of those premiums paid in will be added to the premiums to get a number. I had to write down. So if you got 50 a month and you live 15 months, that's $750 your client paid into Prosperity. They pass away. They're going to get $1,733, which is the 231% of the $750. They're going to get back a total of a little bit less than $2,500. Now, when you sit and think about that there and you're talking to a client, I'd rather save the money, I don't want to do it, I don't want this, I don't want that, is because we have not done our job to show them on paper the way it goes. Okay? What I just told you, if you write it down, you're going to see it in a whole different light, because now you're seeing it, you've heard me say it, now you're going to start thinking about it. So when it comes to a client, your payments are $50 a month. God forbid you pass away in the 15th month, they're going to get back $750, and that's provided you put the money in every month. If you were my mother, you were my grandmother, you were my older sister, I'm going to tell you put it here, so in the event something happens, you know they're going to get this here. Show it to them. Seeing is believing. Now, whenever you hear the word return premium, as far as my memory goes, that's all premiums in the first 2 years. You pass away, you get all of them back plus 10%. When it comes to the word modified, it's a return of premium, but every carrier has got a different twist as Prosperity. Most of them have return of premium plus 10%. When you have graded, that's also return of premium plus 10%. Yet I know off the top of my head, Prosperity, American Amicable, and Royal Neighbors has the graded logic is year 1, 30%, year 2, they get 70%, and year 3, they get 100%. So again, when you're speaking with a client and you see they qualify for the Royal Neighbors, whichever one they qualify for, you must draw them a picture to let them see exactly what it is. And the example I like using is $10,000. It's very simple for them to do the math in their mind to see exactly what you've written is correct. Okay, let me move on. Now, every carrier's got riders. I believe in riders for the mere fact is that if you throw on a child rider, a grandchild rider, a nursing home rider, an accidental rider, people are more apt to keep it because there's an additional value. Now, there's 2 ways to show them how it is. With the child rider, you're going to ask, do you want any information on a child rider? They're going to say, yeah, Joe, I've got 2 grandchildren I want to put on there. So what I do is I don't say, okay, yours is going to cost $57.13, and your 2 grandkids are going to cost $8.19. I throw it all together. I give them a package deal. For you and your 2 grandkids, you're going to get 10, they're going to get 5, 10, 15, whichever one you decide, will cost you only $65 a month, a little bit over $2 a day. It's all blended together. My style. You guys handle it the way you want. Now, a nursing home rider. American Amicable says, Joe, if you add our nursing home rider onto a plan, between the age of 50 to 80, okay, on their plan, 50 to 85 on their plan. What we're going to do is that if your client goes into a nursing home, a certified nursing home ain't being at home or going somewhere. It's a certified nursing home that's been approved by the company and also the doctor, okay? After 90 days of being in the nursing home and being confined, we will then waive their premiums after the 90 days until they come out. If they don't come out, they make the payments until they pass away, okay? Very, very nice little thing to offer. Some agents say, just like I did with the grandchild rider, for $15,000 it'll cost you $82. Nursing home rider is attached. I think it's the greatest program since sliced bread. Think about these things here, because what you're doing, you're offering value to your client. So when a guy like Frank comes in behind you and says, I can save you $8 a month, clients will go, whoa, whoa, whoa. I got a nursing home rider on this here, so in the event, a nursing home rider. Think about it. It's the smartest thing to do. We've also got carriers, which I don't have time to go over today. They've got hospital indemnity plans, and they've got cancer plans. Blended together, say some's going to come out from American Amicable, some's going to come out from GTL. You have to learn how to word that there. Okay, let me go because I'm taking too long. Every carrier we have has got an accidental death benefit rider, which is kind of something that I talk about once in a while, and sometimes I do, sometimes I don't. An accelerated death benefit rider means that if the client has got 1 year or less to live, the carriers will say, we got to pay the money out anyway. Let me see what I can do to help the client out. And they do it also to get business. Some carriers will give you 50% of the face that they'll accelerate. Most of the times you get one time to get that money out. Okay, there's a small fee. 50%, 75%, and I know American Amicable gives you 100% of the face. So you got a policy for $10,000. 50% gets you $5,000, 75% gets you $7,500. AMAM says, Joe, we know you're going to pass away. We got certified documentation from your doctor. He don't think you're going to last that long. We're going to give you the 100% now. They can use that money for their burial. If they need some money for somebody to come take care of them, it's like a little bit of like a nursing home rider indirectly to help pay for a nurse if something happens to them. Okay, boom, boom, boom. Now, do you guys know what ages your carriers go to? Royal Neighbors is now 50 to age 85. Their minimum is $5,000 to $25,000 for their standard. And you guys find that's in good health, no insulin, height, weight will be asked. From $25,000 to $40,000, they've got a much sweeter price out there.
Standard goes to 40.
Huh?
Standard goes to 40 as well.
Oh, I'm sorry. Jay says the standard goes to 40 as well. But from 25 to 40, get that rate, you got to be in good health. Okay, talk about that there. Okay. GTL is another one. GTL, Guaranteed Trust in Life, is almost a guaranteed issue. Almost. They got 6 health questions. Okay. The way they do their payout, which is something to share with the client. Great Western, Gerber, and AIG, first 2 years return of premium plus 10%. GTL says, we're going to put a little twist, Joe. We want to earn more business from you guys. GTL says, if you pass away year 1, anytime year 1, months 1 through 12, we'll give you all your premiums back plus 5%. Here's the kicker. Here's the sweet spot when it comes to GTO. If the client passes away in year 2, anytime in year 2, we're going to get you 50% of the face amount. So if they got a policy for $10,000, $15,000, they're going to get $5,000 or $7,500 in year 2, and then from there, year 3, they get the balance. Okay? So you got to have this stuff in your mind. You need to go to the agent portal that Jay has for you and has this designed for you guys to print this stuff out. This is little small stuff. Here's one more example. You got a client that you want to write, and you say, Joe, I got to write this client here, but they're telling you, Joe, I cannot do it March 3rd. I just can't do it. I got to do it April 3rd. So now you need to find a carrier that goes more than 30 days. In that list, you got them where they're 45 days. I know that Royal Neighbors goes 45 days, top of my head. I know that American Home Life goes 90 days, which I would never do 190 days that far in advance. Yet, you have the option to do 190 days in advance. Certain times people say, I can't afford it, I got a bill to pay, I got this, I got that. So now, instead of walking out with nothing, at least you can maybe give them like 45 days or like 2 months in advance. So, talked about the immediate preferred, immediate standard. They're going to get their money immediately. Standard just costs a little bit more. Talked about the graded, the modified return of premium. Talked about the riders that are available with almost every carrier. And that's it. Make some money. If you don't have information on Prosperity and you want to get that because of the cigarette only as a smoker, get with Jay. You want to get America. America says, we don't care if you smoke. As long as you say you're going to quit smoking in 3 years, you can get them, give your client a non-smoker rate. It's a very nice one to have in case you go visit people who already have it, bought something 2, 3, 4, 6 months ago. They got a smoker rate. You can undercut them and make some extra money. Any questions, call us. We love you. We appreciate you. Hit them hard, guys. Bye-bye.